Now it's time to welcome our first guest, a repeat friend of the income generation, and that's Dr. Laurence Kotlikoff, an economist and a professor at Boston University. He's also president of Maxify, which you can find at maxify.com. Maxify is a personal financial planner. Dr. Kotlikoff, thanks so much for being back with us here on the Income Generation.
Great to be back with you guys. Always have a good time with you guys.
Absolutely, Dr. Kotlikoff. So, we're looking into retirement today in today's show, and we know that majority of retirees have not saved enough for retirement, and some have. What type of problems does that propose for society overall over time?
Well, Jeff, I think you're absolutely right. I think the typical baby boomer is showing up with like $150,000 or less in savings and assets. So they've got Social Security, they've got their house, and they've got this small amount of money. And it's hard to get by because you could live longer than you think. You're not going to die necessarily on time. Everybody thinks they're going to die young because they don't want to jinx themselves into thinking they're going to die late. So they, for whatever reason, people aren't saving nearly enough. And many people may end up living being retired longer than they actually worked. So this is a big drag on the economy insofar as, if you have a lot of poor older people, it affects their spending. You need to bail them out. We already have a big burden we're leaving for our kids, an enormous burden. And now we're talking about even more transfers from the young to the old. So lots of implications for society. This is a major problem, having the boomers in such financial straits as a group. And
another problem, Dr. Kotlikoff, is that the stock markets are at record highs, all-time highs. And so over the next 5 years, do you think that's going to be more challenging for folks to have their assets grow or create income for retirees and near retirees?
Yeah, it's hard for an economist to predict anything, let alone the stock market. Clearly it's a global economy, but there's all kinds of global threats. So I could say, well, look, the stock market's going up, but it could keep going. It can keep going up, and the U.S. We could get out of this pandemic, and everything could people could hope to get the same 6.5% real return on the market that has occurred historically. But the stock market's highly volatile, as you guys know, so it's very risky. And then we got the bond market that's yielding in real terms after inflation, essentially nothing if you buy a long-term treasury bond. And then the chances are that interest rates will go up, so that if you buy a nominal treasury bond, you'll suffer a capital loss. So it's a very tough time to invest. I think people need to certainly pay off their debts, and paying off their mortgage is probably the best way to invest right now.
Yeah, because a dollar saved is a dollar earned. So it's that simple. Like Bear Bryant said, defense wins football games. So Dr. Kotlikoff, right after the break, I want to come back and I want to pick your brains a little bit about the economy to see how strong you really feel the economy is. So stay with us, please. And again, right after the break, in addition to asking Dr. Kotlikoff about the economy, we're also going to discuss some ways to help turbocharge your retirement savings plan. We'll be right back here on the Income Generation.
So I want to welcome back Dr. Laurence Kotlikoff, good friend of the Income Generation. And of course, I'm Jeff Small with David Scranton. So Dr. Kotlikoff, tell us what the first thing somebody should do is who's nearing retirement and evaluating their own Social Security strategies.
Well, I think they want to rethink retiring. If they're the typical baby boomer, they're the people that are retiring these days because of their age. You really want to work as long as you possibly can, and you want to delay taking Social Security to 70 if at all possible. If you need to get benefits for your disabled child, or for a spouse taking care of the child, or for a spouse who has a low earnings record, you can certainly, it may behoove you to take your benefits earlier. But in general, you want to wait till 70 to take your retirement benefit because it's going to be so much higher adjusted for inflation. It's like 76% higher than it if you take it at 62. So
Right.
basically you want to, we talked at the beginning about, in fact, we've got so many baby boomers in so much financial trouble. Going back to work and delaying retirement is really the safest thing to do. Making sure they aren't spending too much on housing, trying to downsize, move to a place that's cheaper in terms of taxes, in terms of cost of living, paying off getting a sure return by paying off mortgages that are charging above what you can earn by investing safely, because mortgages and all that stuff.
And I think Dr. Kotlikoff, the key is, like you said, people think they might die younger than their life expectancy would indicate. So unless you have a reason to believe that both you and your spouse really have an abridged life expectancy, the general answer is to wait as long as you can to take the benefits. And of course, you're the man who literally wrote the book on Social Security. So we take that advice with a lot more than a grain of salt. But I want to, before we run out of time, I want to talk about the economy. The economy seems to be heating up. Is it as strong as the government seems to think? This inflation we're seeing, you think it's a permanent increase in demand, or do you think it's more temporary and transitory? What are your thoughts on that?
Well, we had a deep recession because of COVID. So what we're seeing now is growth that's going back to kind of a pre-COVID level. So you can look at the 6 or 7% growth that we might have over the course of this year and think that that's going to continue forever, but there's no reason to believe that. It's just really a temporary thing to get us back to where we were, because you had all these people who are unemployed or furloughed. They're gone. Things are getting back to normal, and they're getting rehired. But it's not a message about the long term necessarily. That depends on the quality of the workforce, education, technological change, free trade. How our trading partners do. Are they going to demand things? Are their economies going to do well? So it's all interconnected. And, as long as we don't get into any shooting war with China and Russia or Iran or North Korea, things should be okay. I mean, we have now, I think, a much, now we also have, concerns about, are we going to be taxing people too much for them to actually have incentives to work? Are we going to be taxing corporations in a way that disincentivizes investment in the U.S.?
And Dr. Kotlikoff, that can hurt the economy, which can hurt inflation. So it sounds like your bottom line advice, if you were given advice, if you'd be so bold to give advice to the Federal Reserve, it's stay the course, because what we're seeing is temporary, not necessarily permanent. Dr. Kotlikoff, thanks so much for being back with us here on The Income Generation. As usual, it's been our pleasure.
My pleasure. Thank you, guys.